Okay, welcome back. So we've got the market opening coming up on us, and it's let's just have the SGX up to briefly check what it is indicating. Still up about a 0.25%, 50 points or so. Anuj is here to run us through what he's making of things to the market. Anuj, morning.
Morning, Prashant. Morning, Sonia. Well, just one of those days where you don't get a good feeling about the SGX Nifty rate. The market's been so volatile. I mean, if you look at the crude market, for example, overnight, and the kind of moves, it's stuck really in between news from US, from West Asia, and from China, all three different geographies, and we are right in between. There's, of course, the crude volatility. The FI buying has disappeared, which is clearly impacting prices. And there's expiry this week. FOMC minutes come out. I think we react to it on Thursday on the expiry day. So that's going to be important. The other important factor is what's happening in the crypto market. Bitcoin is now below 16,000, and there's a global contagion risk which the market's talking about. Of course, Indian market is immune because we never let crypto become big here, which is good news. On the Nifty, buying on dips and selling on rally, both is working. For intraday traders, yesterday's low of 18,133 is sacrosanct. And from the options data, 18,050 is important. And the Nifty needs to protect really 18,000 for the trend to stay on the buy on dip side. Now, the Nifty is not breaking down because the Bank Nifty every time puts its hands up like it did yesterday. In fact, yesterday was a curious day. The Nifty ended at low point of the day almost, and the Bank Nifty ended at high point of the day, which is very interesting. On the upside, then 18,250 to 300 will be your first major hurdle going by the options data, and 18,340 if crossed can lead to a big move, which is unlikely though going by last week's expiry and the way the option writers managed to keep the market in a range. On the Bank Nifty, yesterday spoke about 42,200 as the support, and the low was 42,202. So that clearly is your sacrosanct number to watch out for, and 42,500 on the upside.
Okay, Anuj, thanks a lot for that, and have a great one. We'll keep coming back to you for more, or whether, perhaps switching the channel to get a look at your view for more. Thanks a lot. For the Nifty, the pre-opening rates are just about settling. Also, we'll wait by for these rates to settle. The Sensex is down about 0.2%. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, good morning. Your thoughts on how to approach the index now, and what are you looking at in terms of individual stocks?
Good morning, Sonia. Thanks for having me. So we have seen some decline in last 2-3 trading session, but still your Bank Nifty is finding support and strength from the lower zone. However, the Nifty has negated its formation of higher lows on the weekly scale and forming lower highs from last 3 days. But Bank Nifty is still respecting the 42,000, 42,200 zone. So I believe that even after some decline in the index, especially in the Nifty, selective heavyweights and Bank Nifty are not supporting the major decline led by lower volatility. So that's why we are likely to be with stock specific and believe that decline could be bought in the market. So first, talking about Nifty, we require a hold above 18,200 to 50 zone. If it manages to hold the same, then again we are heading towards the recent swing high of 18,442. So we believe that index, which remain in a range of 500-600 points for the entire series, and now at the end fag of the series, likely to be in the range bound, but with support we are expecting some uptick in the index. Now in Bank Nifty, we believe that 42,000 could be the major put writing zone. So with that support, we are expecting an uptick to us 42,750. Now looking at a stock specific, we have positive on the most of the defense name, even for the short term as well as for the positional point of view. And especially we have positive view and recommendation on the HL, Hindustan Aeronautics Limited. This stock is up by around 100% on YT2 basis and continuously moving upwards from last 4 to 5 series, with carrying of the long rollover from series to series. So HL is one of the strongest counter which has retested the breakout of its cup and handle pattern, added long built up. So recommending to buy for an upside move to us 2750 with a stop loss of 2600 level. Second trading idea, that is buy on Axis Bank. We have positive view on Bank Nifty and comparatively more positive on the PSU Bank. So here one should keep the radar on counter like PNB and all the non-FNO PSU Bank. So here we are recommending to buy on Axis Bank. This stock has seen a consolidation breakout and correction of last 2 weeks is getting over. So expecting some uptick and put writing activity. One can buy with a stop loss of 855 and we have a target was 900 level. Last trading idea, that is one of the strongest counter, safe and steady, that is buy on Bharti Airtel. Strongest setup, up by around 5 to 6%. Major trend is positive, added long by 7% in last 2 days, 20% OI added in the entire series. So momentum could continue. One can buy with stop loss of 840, and Bharti Airtel has potential to rally towards 880 to 888 levels on the higher side.
Oh.
Okay, all right. Thanks a lot for that, Chandan. You have a good trading session. Well, for the time being, let's focus on a momentumizer segment. And one stock that moved with good momentum yesterday is Bank of Maharashtra. Vivek joins us to run us through a couple of details. Vivek?
Well, that's right. So, this particular stock has been in focus for the past couple of trading sessions. And as you mentioned yesterday, the stock moved higher on very strong volumes. Now, the delivery percentage too was quite decent given the fact that, the company's majority shareholding in the government of India with almost over 91% of stake that they hold in the bank. But just have a look at the price action in this particular stock in the past couple of trading sessions. 4 consecutive days, this stock is moving higher. So 26% is the kind of move that this stock has seen in the last 4 trading session. In the last 1 year, the stock has gone up 50%. And especially if you're talking about, the technical stock trading above all of its key DMAs, the 50, 100 and 200, and also trading at a fresh 52-week high. One of the key triggers for the up move in the stock has been the relatively strong performance as far as the Q2 is concerned. Profitability has doubled on a year-on-year basis, and margins too were quite strong as far as Bank of Maharashtra was concerned.
All right, Vivek, thanks very much for that. Yeah, I mean, big gains yesterday, starting about 1.5% higher this morning as well. Now, Karan Thorani is Senior Vice President, Research Analyst at Elara Securities. He's joining us now to discuss what's going on. Some of these new age companies, lock-ins are expiring, pre-IPO investors are getting out, and others are getting in. Old blood going out, fresh blood coming in. Karan, hi, good morning. Your broad assessment of how things have sort of happened so far. Deepan was with us earlier, who was saying that, well, some of the supply has been pretty well absorbed. Your thoughts, initial first take.
Hi, Prashant. Thanks. Good morning. So basically, if you look at what is happening right now, this was more on expected lines. Clearly, you will see a shift in terms of the nature of investors in these internet companies. Now, there'll be some companies which will be standing out within the bucket, and there'll be some companies, which may not be. And the reasons for that is, the path to profitability. I think for any internet company, you have to showcase a path to profitability. Otherwise the valuations, may not be justified. So when these IPOs had come in last year, most of them were given a valuation of, basis EV sales, because there was no metric to measure the EBITDA or the PAT margin. But definitely there was an expectation that, margin will come in and there will be profit, which is there. So wherever there is a clear path that, there is some sort of a reduction in terms of losses, there is some sort of improvement in terms of showcasing some kind of a margin, the companies are getting a premium valuation. Wherever that visibility is not there, the valuations have, just come down sharply. So I think this is how it's going to be. I think the internet play is going to be more selective in nature, and profit focus is something, which is going to continue, because I think institutional investors would not continue to value companies on an EV sales basis.
Hi, Karan. Good morning. What kind of multiple are you giving these companies? If you could give us a sense on them.
So I think if you look at these internet companies, what we are doing is, we are trying to kind of benchmark this to the traditional companies. Now, for example, like a Zomato, we are trying to benchmark this to Jubilant. For a Nykaa, we're trying to benchmark it to, traditional FMCG personal care companies. So in terms of, growth rates, obviously these internet companies, in terms of revenue growth rates, are towards, 25 to 40% in that wide range. Depends on basically which category they are playing at. And the traditional companies in the same bucket are not growing more than 10 to 12% in terms of revenue. So definitely that premium is justified. But we also what looking at is in terms of the margin as well. So if you look at something like a Nykaa, their BPC core BPC margins would be in the range of about 10% in terms of EBITDA, as compared to other personal care companies, which would be close to 20-25%. Similar to a Zomato, I think currently, they have kind of, increased their margin in the last 3 quarters with a clear focus, by cutting down on marketing spend, some rationalization on employee front. So they are, trending more towards that, 4 to 5% kind of an EBITDA margin guidance, which is there. So I think what we're trying to do is that whichever company is, kind of able to garner a better EBITDA margin with hefty growth, the premiums are going to be higher versus the traditional counterparts which are there. So I think this is the only way we can kind of mirror it as of now. And if you look at in terms of the PE basis as well, there will be a similar kind of premium just as on the EV EBITDA front.
So what do you do from here on in stocks like Nykaa, Delivery, etc.? What is your advice?
So on Nykaa, basically, we have a buy rating. Okay. Our target price on Nykaa is 240 rupees post this recent bonus announcement, which is there. We believe that the competitive intensity in Nykaa definitely is growing in terms of online BPC space. But again, it's not very easy to replicate what Nykaa has done in terms of first move advantage, in terms of customer experience, in terms of the trustworthiness, because a lot of the products that are sold on Nykaa are premium in nature. So customers don't really want discounts, but they really want the premium product, and they want the genuineness of the product basically. So that's one in terms of the growth rates for the PPC, and there are also multiple margin levers from lower fulfillment costs. We are going to see higher ad revenue and also some increased share in terms of private labels. I think basis these, 3-4 things, I think there is good enough leeway and room here for the revenue growth to be about 25 to 30% for the next 3 years with a consistent improvement in terms of margin. The only monitorable or the risk factor for Nykaa would be, the fashion business, because we're not very confident of, them doing something very well over there in terms of profitability. They are still making losses. I think that segment is highly competitive, too much of discounting. So I think that's the only monitorable in terms of, where the fashion losses actually come down, or probably that business goes to break even. As far as Zomato is concerned, I think we've all seen that, last quarter we saw what happened there in terms of growth. The growth has, come down severely from a 35 to 40% kind of a range towards a 25-30% kind of a range. But I think that's not bad if the company is trying to focus in terms of margin. There's a clear trajectory that the margins will, kind of move up from here on. But Zomato, from a business standpoint perspective, we believe the concerns are multifold. I think the first thing is the issue of take rates, wherein we've seen, constant pressure from NRAI, CCI kind of authorities, kind of wanting to reduce the take rates. Then there's the issue of order value in India. So if you look at India for that matter, once you increase the frequency in terms of delivery, it's very tough for order values to actually move up. And effectively, delivery charges may not also move up because they are linked to the order value. So I think there are concerns, in terms of the profitability path for Zomato. But nonetheless, if they're able to surprise positively, I think that stock could also see some sort of a re-rating. And the monitorable in terms of losses would be the Blinkit business, the quick commerce one, which is again highly fragmented. Unit economics still not proven on a larger scale per se, and we clearly don't know in terms of what is going to be the intention and how far they're going to go, in that business. So I think Zomato is more of an uncertain situation right now in terms of profitability. Nykaa that way has got a more proven business model as far as profits are concerned.
All right, fair enough. Thanks very much, Karan. Appreciate you joining in. Right here in the studio, we have both Zomato and Nykaa users, right?
You know what? Contrary to perception, I have never bought anything from Nykaa.
From Nykaa?
No, never.
I thought you did.
Yeah.
I see.
Except during the pandemic, Nykaa had also switched to selling a lot of, like sanitary wear, sanitary products and baby products and diapers and also at that point when there was no access. Yes, I did. But otherwise, makeup, we wear so much of makeup here all day, right? I don't think you need it for the rest of the day when you're back home.
All right. Well, that's Nykaa and Zomato for you. Well, let's bring in Sudarshan and Mitesh for 9-10 calls. Both are ready with us. This is 4 minutes to go for the market opening. Sudarshan, what are you watching out for? What are your 9-10 calls?
Well, the Nifty is a buy once it touches 18,200 and stays above it. Torrent Pharma is a buy with a stop under 508.
Okay, Mitesh, how about you?
I'll bet on IEX. I think it's trading. It's opening around 146.5. If it starts getting past 147, buy with a stop below 145 for a first target of 153.5.
Okay, let's also talk about stock in focus, NMDC, that has been on the uptrend. Nigel, you're watching that?
Well, that's right. Kotak had gone ahead and upgraded the stock a couple of days ago, and now it's Motilal's turn. So they have upgraded the stock to buy. They have upped the target price to 134 from around 124. And obviously, they have upped their sales volume guidance as well as the EBITDA per ton guidance out there. And that's why the total PAT estimate that they were working with has increased by around 11 to around 26%. For the next year. That's for FY23 as well as FY24. They believe that NMDC is the biggest beneficiary of the rollback of duties, and we had mentioned that as well. They believe that now the company can go ahead and increase volumes as well because there'll be a lot of exports of pellets. And since pellet prices are likely to move up, they say that that reduction of prices that we saw in the past week, that could get reversed as well. So pellet prices moving up is a benefit for NMDC's iron ore prices, and they're working with a price increase in December itself. The demerger of the steel unit, it's positive, though that's already been done, because now the management bandwidth can focus on the core business. That's the iron ore business. So put all these factors together, we're tracking NMDC.
Okay, well, NMDC is the stock that we're looking at. If Mitesh is still with us, all right, before that, let's go to Sonal. She's tracking the new gas pipeline tariff and the impact that it would have. Sonal, over to you.
Well, it's largely positive for the likes of GAIL and GSPL, which are the pipeline operators, and these rules are effective from 18th of November 2022. Now, just putting out impact of some important amendments. It's a technical document, so some of the important ones there. There is discontinuation of proposal to share 50% of the proposed incremental tariff revenue, which actually led to lower capacity expansion by these pipeline operators, and now they can go ahead because they will not have to share it with other players. This will lead to brownfield network capacity expansion. Transmission losses, which were not considered earlier, will now be considered in the books of accounts, which will lead to better accounting here for these companies. And MK says it will be positive for GSPL's earnings by 3%. That is the impact of tariffs. Gradual annual escalation in tariff is allowed, which would mean there will not be a lump sum improvement, but every year there will be a tariff hike for these pipelines. MK says PNGRB wants entities to earn a reasonable rate of return, and channel checks are indicating that these pipelines are happy with the amended rules that the regulator has come up with. This will pave way for future expansion, which was curbed till now, and unified tariff is also likely to be implemented from 1st April 2023, which is the other big update for the sector. And Citi has gone ahead and they have upgraded GAIL to a neutral from a sell. They've increased the target price as well.
Okay, thanks a lot for that, Sonal. Well, that's the first tick on the index. Absolutely quiet. The Nifty is up about 18 odd points. The mid-cap index is up about 70 points and Sensex is up about 60 odd points. So not too much happening, just flatlining for the market and marking time around that 18,170 mark. What's gaining this morning is L&T. It's up about 0.8%. Grasim, NTPC, M&M, Ultratech Cement are a couple of stocks that are looking good. You have some of these Bajaj group stocks that are holding up. Bajaj Finserv, Bajaj Auto, that are looking not too bad. And autos as a pack actually is in the green this morning. M&M, Maruti Suzuki and Bajaj Auto, all three in the green at the moment. ITC, UPL, Dr. Reddy's, Tata Consumer are a couple of other stocks that are trending on the green line. But the market is very, very quiet. On the downside, JSW Steel is down about 0.6%. IT is having a bit of a rough start, so nothing alarming. TCS, HCL Tech, Wipro just trending in the red. And then you have something like an Asian Paints, Kotak Mahindra Bank, HDFC Bank that are absolutely flat. But really, it looks like everyone's gone off early this week, especially, with the US markets, Thanksgiving holiday and all of that. The market has started on a very, very quiet note.
Well, that's right, Sonia. I think the couple of those stocks that Sonal just spoke about, GSPL as well as GAIL, both of them have moved higher after the PNGRB has notified the natural gas pipeline tariffs effective November 18. So both of them, they're flying away actually, up and about in trade. Indico Remedies, the management had, an analyst meet out there, and they sounded fairly optimistic about things going ahead. So let's pull up that stock as well. A couple of other notable movers. Bank of Maharashtra. Vivek Iyer told us about the delivery being out there quite high. You had yesterday as well, the stock was up. It's opened up with a gain of around 2%. HCC, that's the other one in there. IDBI has been slowly selling some stake in the company, and it appears that selling exhaustion could come about once this entire pending pending quantity gets thrown out. So that's an important one as well. Keep an eye out on Mindtree as well. I think today is the last day that Mindtree will trade, because that record date is there on 24th and today is the 22nd. So all the FNO contracts as well will expire, and it's the final day of trade. So Mindtree opening more or less flattish, but I think you should eye that one as the course of the day progresses. Flattish start, Prashant. What else?
Well, just a few other things, Nigel. So we have UCO Bank, if we can pull that up, which is starting, 8% higher. It's at 20 rupees. It had a big day yesterday. It's up another 8% this morning on huge volumes as well, straight off the bat. You got Ease My Trip. We had the management with us earlier, which is starting 7% in the green. Ease My Trip has got significant volumes as well for this time in the day. GSPL, of course, we highlighted 9% in the green. Sonal has been talking to us about that. JK Paper is another one, which is starting about 3% higher, and that is at about 433. Delta Corp is coming up with decent-sized volumes. Delta Corp is up about 2.33% right now. By the way, it's a lot of banks once again, right? I mean, I didn't go into all the details, but Maharashtra Bank, Union Bank, UCO I mentioned, Bank of India, Indian Overseas Bank, all sort of with gains of between 2 and 4%. So PSU banks is once again turning out to be a bit of theme, which is continuing its gains so far. Varun Beverages is starting 3.25% higher. That's a well-owned, well-traded name, which is now at about 1140 on decent-sized volumes as well. 2:1 in favor of advances. That's the advance decline ratio. Nykaa is down 2.34%, 179 on Nykaa. And there is Escorts. Escorts saw this huge up day yesterday, which I think it ended up about 8-9%. It's starting down 2%, so there is a slight bit of profit booking after the move. Paytm is another one, which is down 2% at about 525. And there is Mazgaon Dock, which starts down about 1.5% as well. Delivery is starting 0.5% lower. And look at Max Financial Services. Maybe just too early to kind of make any, because volumes are not too much, but it's starting 3% lower. Max Financial 636, and that is there's a sharp cut for a stock at this point. Sonia.
But look at the phenomenal move in the PSU banks, right? Almost all of them sitting at fresh highs, and Bank of Maharashtra was the stock that was on a momentumizers list, moving up well. A fresh 52-week high there. Look at UCO Bank, 9% higher now, and these stocks have given you returns of 45 to 50% in a month. That's the kind of movement that you've seen. Of course, many of them have been, the base is low. Many of them are penny stocks as well. But IOB, Union Bank, JNK, Bank of India, Canara Bank, UCO, Bank of Maharashtra, all of them now up about 20 to 50% in this month already. Phenomenal move.
Yeah, I mean, absolutely. And by the way, the index is up about 3% this week so far. We're in the second day. Yesterday had a strong day. Today had a strong day. For the year, as Sonia said, I mean, the index itself, the Nifty PSU Bank index is up 55%. And that's something we've been highlighting to all of you. The Nifty is turned down into the red. I mean, just very, very slow kind of session, at least at open. Nothing big out of the gates, but yesterday's low was 18,133. We are at 18,155 for so far in the session. So, I mean, the high was right at open, and now we are basically at the lowest point, almost the lowest point of the day so far. The big level on the downside, and I've been saying this, is the 20-day, which is not very far away at about 18,080. About 70 points away from where we are right now. Broader market indices are already now below the 20-day. The Nifty 500, as I said earlier, is already trading below the 20-day moving average. All right. Now, Rahul Chadda is joining us. He's a Market Master of the Day, Chief Investment Officer at Mirae Asset Global Investments. Rahul, great to have you with us here. Thank you very much for your time. Just wanted to understand your thought process as far as markets go, and whether, how would you look at it? Is this a market waiting to kind of take out the previous highs and charge higher, or there is indecision and a bit of a pullback due now? What's your sense?
So we've been cautious on markets for the last 6 to 9 months, and we continue to have that view. Look, markets are going to be range bound at least for another 6 months. We've seen YTD. I was looking at the performances here. Look, Indian market has done its bit by falling the least amongst the regional pairs. In dollar terms, the market's down about 7% compared to, let's say, S&P, which is down 17%, HSCI, which is down 25%. So I think for next 6-9 months, we would be range bound. It's only when markets get discomfort that the Fed's moved away from peak hawkishness to neutral and is becoming more dovish. And the same thing happens with policy making in India also, that the central bank moves from raising rates to neutral to probably cutting rates. That's where market multiples would increase. That's where markets would get excited in anticipation of a growth acceleration. But till now, it's going to be range bound. Yeah.
Okay, range bound. What about the rally, the phenomenal rally, Rahul, in the PSU banking space? Is it too late to enter now, or do you think that there's still more scope to go?
Look, again, if you look at the numbers, those numbers have been phenomenal. These names have not done anything for 10 years. So there was obviously a pent-up demand for this. These names were under-owned. Thankfully, we had some of these names about 2 years back, enjoyed the rally. Last couple of months, we were a bit kind of a circumspect here, and the reason was a bit worried on the macro front. We'd seen sharp drawdown in forex reserves. Thankfully, that pattern's been corrected in recent weeks. We've seen some bit of an increase in reserves. Again, bulk of our financials exposure would be still private banks. One would have some PSU banks, but these would be the leading PSU banks like SBI, some little exposure to Bob, etc.
Hi, Rahul. Morning. What about these new age themes? There's plenty of supply available. Are they exciting all?
Yeah, so themes may be exciting. The prices are not. So it's a buyer's market. One can wait for the supply to come and choose one's prices. To give you an example, look, something which we've been interested, we've added, is being the food delivery space, the likes of Zomato, where we've seen the company do a lot better in last 2 years in terms of gaining market share, etc. And one got good entry points when the supply came, where the stock was nearly down 30-40% from the IPO levels. So one can be opportunistic in these good companies, make sure that one builds position according to the price one is comfortable with. And on the other names, look, the supply is going to be there in plenty for next 6-9 months. So one can be patiently waiting, and wherever we get the comfort on price, I'm sure we'll add to our positions or build new positions in some of these names.
Rahul, banks and financials doing well, but the only thing is a consensus overweight, right? There's no great big surprise buyer who's going to come in incrementally. Maybe there is, we don't know. What's your sense? Yeah.
So absolutely. See, I think that's something well said. That look, most FIs own banks. So if they come to buy something in India, banks is something of first choice. But look, that's where again you'll get the earnings uplift also. So if some of these macro concerns recede, and to be fair, what we've seen in recent days is oil kind of go down rather than go up. So we are going into winter with oil more at 90 rather than 110. So that scare of 130, 140 oil, which we had beginning of this year, is a lot less. So if you keep that in mind, I think banks compound well, but the big money is going to be made once we get signs of growth acceleration in the economy. So that's where when some of these consumer names which have got beaten down would kind of a bounce back. That's when some of the cyclicals, like right now, nobody talks of metals, etc. But as the global growth bottoms and over next 12 months, as Fed moves from hawkish to neutral to a dovish tone, I think some of these cyclicals would provide much higher returns.
When you say cyclicals, do you also include some of these capital goods names in that, infrastructure? Because infrastructure hasn't performed for many years now. Do you think we are seeing a turn in the cycle?
So clearly, if we see the stock prices are saying so, if you look at the recent kind of a performance of these names, the multiples they're trading at record high multiples. So that is clearly market being excited of the potential for these names for the future. One has to see a pickup in the private sector capex. There is a little bit of an increase here and there, but not a broad base pickup in the private sector capex. But should that happen, I think infrastructure cycle can be a multi-year cycle, and this is a trend we believe is going to happen in the coming decade. That as reshoring happens, as manufacturing moves away from China, as countries want to take control of their strategic manufacturing, etc. I think the domestic cap goods companies are going to benefit from that.
Rahul, what about the IT space? Big debate out there, the big underperforming index of this year, but it had a splendid 2020 and 2021. Now, some of those stocks, particularly the large cap names, they're trading closer to around their 5-day PEs. Do you think that that's a good investment opportunity right now?
So I think that can be a good hiding place in the sense that if one is worried about rupee depreciation, one is worried about ballooning trade deficit, etc., these are a good hedge. From a valuation perspective, look, they're at fair valuation, anywhere between 18 to 20 times. Right now, it seems like US is going to have a soft landing. Look, it doesn't have those excesses of 2007, 2008. So it's not going to be a deep recession. If at all it happens in US next year, it's going to be more of a softer 1 or 2 quarters of weak growth. So that way, IT should do well. I mean, look, these stocks are going to grow their revenues at 7 to 10%. You have 3 to 4% dividend plus buyback yields, etc. So these are anywhere between your 12-13% return stocks.
The other name is the other pack actually, which has done very well, Rahul, is entire defense, right? And now, at least in names like Mazgaon, etc., you're seeing slight pullbacks. I mean, Mazgaon stock is corrected 15% from its recent highs. HAL not so much. By the way, we have the management of HAL joining us next on the program. Any thoughts? Would you buy any of these names? If they are to be treated like capital good stocks, I mean, same sort of sector classification, same genre, if I can use that word, the valuation gap is huge, right? I mean, ABB, Siemens, all these are trading at 70, 80 times earnings. These are still, 15, 16, 18 times earnings. Any thoughts?
So eventually these names are going to re-rate. I think there is some challenge which we have as ESG investors, that it's hard for us to invest in these companies which are into manufacture of arms, ammunition, etc. But look, with what we discussed before, with all these geopolitical tensions, with all this happening in terms of reshoring and looking to develop one's own strategic manufacturing domestically within the borders, I'm sure these names would have ample order books.
Okay. Well, one final word then from your end on the auto space, because over there as well, what we're seeing is there's a pickup in demand, but then there are some different trends, diverse trends. You know, the global markets are still sulking. Two-wheelers have not recovered to their full capacity, while some of the other spaces are doing pretty well, like SUVs. What do you do here?
So we continue to like auto space. I think this is a space which has done well for us. And look, a good way to look at autos is what's happening. Autos today is what happened in smartphones 4 or 5 years back, where people used to be excited with the new features being introduced by the new range of smartphones. So that's happening in autos. If you look at this with what they've done with the entertainment systems and again the navigation system, there's a fair bit of an excitement in that space with all these hybrids being launched, with all these EVs being launched. There is pent-up demand which is coming through. There's a replacement cycle which is coming through. Even post Diwali, the channel checks have been very positive on the space. So this is a space one would continue to buy on dips. And look, there was a worry on oil, but crude at 80 to 100 levels should be good for these names. So auto space is something one would like, and ideally one would like to be with companies who have a good EV lineup also, so that in next 4 or 5 years when the transition happens to EV, these companies at the forefront of that transition.
Okay, all right. Rahul, thanks so much for stopping by and filling us in with your quick take on markets and a whole host of stocks as well that we just discussed. By the way, keep an eye on a few stocks in the broader markets. Amara Raja, well, that's flying away. It's moved to the high point of the day, so keep an eye out on that one. And IEX yesterday had a good run. Today, it's pulled back some bit of that. So that, in fact, has moved into the red. But clearly, the big theme has been the defense theme. And let's get straight to the management of Hindustan Aeronautics. They delivered a solid set of numbers. The order book as well is looking very, very strong at around 8,400 crores. Well, to discuss the outlook and the opportunities for India's big defense localization push, we are joined by Mr. Ananta Krishnan, the Chairman and Managing Director of the company. Hi, sir. Good morning. And thanks so much for speaking to us here at CNBC-TV18. Well, I was looking at your first half of the year. And in terms of your revenue mix, the repair and overhaul, well, that contributed a higher proportion in comparison to manufacturing. Could you tell us, in the years to come, how do you see this mix shaping up between both these two segments? And earlier you were talking, I think, about a margin guidance of around 24 to around 25% in the longer term. You stick to that?
Yeah. Good morning. Thanks for this opportunity again. And as far as your first question towards your repair and overhaul and manufacturing ratio for the first half of the current financial year FY23 is concerned, as we have already indicated in the last financial year itself, there will be some pressures on our manufacturing orders in the current year because the platforms sales, which we call it as manufacturing, major contracts will all be getting over in the current financial year, because of which the gap will have to be filled by the repair and overhaul activity as well as for the supply of spares. That is one reason why in the current financial year FY23, the ROH activity and the supply of spares is expected to be somewhere around 60%, and the balance 40% will be in the manufacturing sales. So this trend is likely to continue for the next year as well, because our new contracts which we have concluded and which is pending for almost 84,000 crore, the deliveries will start only from 24, last quarter of 24, which would mean that 24, 25 onwards, it will be the manufacturing contracts will get executed in full, and then the ratio will change. The ratio is expected to be for the FY25. The ratio is expected to be in the range of 50% between ROH and manufacturing. But for the current FY23 and FY23 and 24, it will be in the ratio of repair and overall will have a higher ratio of around 60%, and manufacturing will be a lower ratio of 40%. and this will be for the next 2 years. And as far as the EBITDA margins are concerned, we have indicated 24-25% in our initial guidance, but we expect it to slightly exceed that because the ROH activity, since it will be a larger portion of ROH activity will be there for the current year as well as for next year. Our EBITDA margin also is likely to be a percentage point more than what we have anticipated. So it should be in the range of around 26% is what we expect. So it should improve.
Mr. Ananthakrishnan, isn't
what we have earlier guided at 24%.
Got it. Mr. Ananthakrishnan, aren't margins on repair and overhaul much better? Isn't it a much more profitable business? So wouldn't you want to kind of lean and get into more of that? What's the difference? I mean, typical manufacturing margins and repair and overhaul?
No, it's not that way. We need... repair and overall, it's again flowing from the manufacturing platforms. So for the revenue growth, manufacturing platforms is very, very important to us. And that is where we are focusing on. So once we start delivering the manufacturing platforms, the overall EBITDA margin will still be at 24-25%. But then the repair and overall subsequent years will flow from those manufacturing contracts. So manufacturing contracts is equally important for us, and repair and overall will contribute towards your profitability, but manufacturing contracts will contribute towards your revenue growth. Okay. So both we will have to be there to see that both revenue growth and EBITDA is being achieved.
Okay, so just to clarify, your EBITDA margin guidance, you have revised it higher to 26-27% versus 24-25% that you guided earlier, correct?
Right.
Okay. And your growth guidance, you maintained at 7 to 8%. All right, got that. I also want to understand, you know, your receivables have gone down, and that's a big positive. They've reduced to about 5,000 crores in the first half of the year compared to almost 5,500 crores in FY22. Do you see a further improvement as far as receivables are concerned?
Receivables, yes, ma'am. Today the receivables are we are quite comfortable at around 60 days, and I don't think anything further is further reduction is possible because the cycle time required for us to complete the order and then the documentation to complete the documentation and realize our payments, it will take on an average 60 days. So I think 60 days of receivables is quite good for HAL, and if we can maintain those 60 days receivables with the advances which we get for all our milestones, our working capital cycle is expected to be very comfortable. We don't anticipate any problem in over that. 60 days is quite a good number.
Okay, all right. And so just to confirm, your revenue growth that you're looking at is how much? Single digit, or do you believe that it will be a 10 to 15% growth for the next few years?
No, for the current year as well as for the next year, that is FY24, it is expected to be at single digit as I have indicated earlier.
Got it.
It will be in the range of around 8%. Yeah. And the double digit growth is expected to start from FY25 onwards.
Got it. All right. So, since you said that manufacturing is also going to be the revenue driver, in the near term, it may not contribute too much, but otherwise it's going to go to 50%. So your capacity of Tejas is going to be important, right? Could you tell us what is your capacity? You were increasing it, I think.
Right.
So when does the additional capacity come on stream?
Yeah, already we have started the augmentation of the capacity from 8 to 16 numbers. In fact, the capital infrastructure which is required for that has been created. The second line of Tejas manufacturing program also has been have been operationalized. Added to that, we are also trying to develop the private ecosystem by outsourcing many of our work packages to the 4 major vendors in the private sector, so that they will also be start supplying from next year onward. So all this put together, the Tejas at the minimum will be at 16 aircraft per annum from FY25 onwards. And depending on further order book position which we expect to receive, we will be able to scale up to 24 numbers without any much addition to our capital investments.
Okay.
Mr. Ananthakrishnan, I have 2 questions. One, the only constraint is capacity, as I understand it, right? You're saying that you're expecting 1 lakh crores worth of orders in manufacturing orders in the near term. So order book is ballooning. So is there a thinking in the government company to kind of Ministry of Defence to materially step up capacity in a very large way? Because indigenization defence needs are huge, and the thinking is much of it should be made here locally. So that is one. And second, on that repair and overhaul, a very layman question, but would you said that what you manufacture kind of feeds through later into repair and overhaul, but in defence contracts, repair and overhaul is only for stuff that the company makes, or you can kind of go into repair and overhaul for other sort of other items which were not manufactured by you. So could that grow larger? Go on, sir.
Yeah. See, as far as the capacity is concerned, I can confidently say that we have got sufficient capacity to manufacture any number of orders, any number of quantity. And like, for instance, the Sukhoi capacity which was there in Nasik, and now that the Sukhoi order is getting completed, we have got the capacity released for manufacture of other aircrafts. Similarly, in the aircraft division and in the LCA division, we have got the capacity to manufacture both the LCAs, because aircraft division also can manufacture LCA, and LCA division also can manufacture the Tejas. So which would mean that there is no capacity constraints as far as the fixed wing aircrafts are concerned, both in Nasik and in Bangalore put together. Added to that, as far as the helicopter segment is concerned, we have already have an established facility in Bengaluru manufacturing close to almost 30 helicopters per annum. And we have also added a huge capacity in Tumkuru, which is also getting operationalized now. And where we can manufacture up to 60 helicopters. So depending on the type and requirement of helicopters, we could go up to 90 numbers per annum in the near future. So all this would mean that capacity is not going to be a constraint for HAL. In fact, we are looking for more orders to expand our capacity. And today what we are focusing is that to see that the orders are getting realized so that the products will be produced to our full capacity and no idle capacity will be there at HAL. So capacity is not going to be
Capacity
a
is not
constraint.
in
The second part of your question on the...
Go ahead.
Is not a constraint. And the second, and the second part of it in the repair and overall, you were asking whether that it will flow, whether it will be only for HAL manufactured platforms or even for the other platforms. Basically, we restrict ourselves to ROH activity to HAL manufactured, which would mean that could be both our own design and developed platforms and also the license productions which we do for the, which we manufacture. So it will be restricted to HAL platforms, but we will also look for opportunities, from the other platforms if at all it comes through our way. And if it is going to be commercially viable and profitable to HAL, we will not have any hesitancy to take up those things.
Okay, the last time you had said that you have a total order visibility of 60,000 crores in the next 3 to 5 years. What about the international orders? Are you seeing any pickup over there? And is it a part of this, this vision of 60,000 crores over the next 3 to 5 years? How is the order visibility on the international front?
Yeah, international front, as you know, ma'am, it is going to take, it is not something which will happen very soon, in the sense that we have been aggressively following up at least 4 or 5 leads which we have got. The recent one, as you know, we have been there with Argentina. There have been quite a good number of inquiries, and in the Philippines recently our team has returned 2 days back. The inquiries have been quite good, and the interest shown by them also is very good as far as our helicopters are concerned. And Malaysia, we have already bidded. Of course, there are challenges as far as the Malaysian order is concerned because of the recent political developments over there. But all in all, we can say that there are visibilities there, and we are also aggressively following it up. We expect it to orders to materialize maybe in the next 1 year, at least one breakthrough order which we should get that will open up the possibilities. Okay. So we expect that the international orders should materialize in the next 2 to 3 years.
Okay, all right. So just clarify a couple of points. The Malaysian order, is it on or is it off? The political uncertainty out there, that's what's worrying the street. Is it still on?
Yeah. As far as HAL is concerned, it is still on, but definitely there are challenges which was not there earlier because of the recent changes in the political development.
So when does that get
cleared out? But we are still
out?
on, our product has been shortlisted.
Okay. And when do you get clarity on that,
We'll have to wait. We'll have to wait.
You can't give us a
clarity. Maybe we should get it in the next 15 days. Yeah, some 15 days to 1 month time, we should get some more clarity.
Okay, that's about Malaysia. That's out of the way. You told us receivable days will be at around 60 days.
Yeah.
Working capital as a percentage of sales, I think it's around 23-24%, which is superb. You expect it to hold at these levels? What should be the number we'll work with?
Yeah, we'll be able to hold the days because now that since our sort of working capital is upfront funded by the customer by way of various milestone payments, we don't foresee any working capital problems, and what is presently there, we will be able to maintain those things.
Final question, sir. Everyone is waiting by for this. Is there a divestment on? Is there some kind of an OFS overhang? Have you heard anything that keeps coming up? But have you heard something?
No, as far as we are not aware of any such development. Probably the government of India will be in a better position to tell them.
So no OFS in the works?
No, as of now, nothing. We have not heard anything from the ministry.
Okay, well, we'll leave it at that. Mr. Ananthakrishnan, thanks a lot for joining in, and all the best for the next year or so. That's HAL. They have raised their EBITDA margin guidance to 26 to 27% from 24 to 25% earlier. They maintain a single-digit growth guidance on the top line for this year, but they're saying FY25 onwards, they will get to double-digit growth. That's had a phenomenal run and has been the stock of the last 1 year. Let's slip into a quick break. On the other side, another very strong company, Uno Minda, reported excellent numbers this quarter. Sunil Bose